All right, today on The Explainer, we're jumping right into the deep end, the world of live streamed stock trading. It's one of those places where fortunes can be made or lost in literally seconds, and, well, it's like they're speaking their own secret language. So I want you to picture this. A digital trading floor, and it's all being broadcast live. We're talking wall-to-wall charts, just jargon flying everywhere, and traders are making these huge financial decisions in the blink of an eye. It's fast, it is so intense, and honestly, if you're just dropping in, it can be totally bewildering. And then, right in the middle of all that chaos, you hear someone say this. It sounds urgent, right? It sounds triumphant even. But what in the world does that actually mean? See, this is the kind of coded language that's just flying around nonstop, and that's exactly what we're going to unpack today. Yeah, to you and me, it sounds like pure gibberish, but for the traders on this floor, that's a crystal clear signal. It means a successful, pre-planned trade just went off without a hitch. So our whole goal with this explainer is to translate all of this chaos for you, to turn that crazy jargon into a strategy that actually makes sense. Okay, so let's open up the playbook. If we're going to understand the action, we have to learn the language first. And trust me, by the time we're done with this section, that weird quote from the beginning, it's going to start to make a whole lot of sense. All right, so the most fundamental thing you need to know is a concept they call areas. Now, these aren't just some random lines they've drawn on a chart. No. These are pre-calculated price points where they fully expect the market to, react or turn around. Think of it like this. For these traders, these areas are like the X's marked on a treasure map. And these areas basically break down into two main types. First, you've got support, which acts like a price floor. The traders on this stream actually have a cool name for it. They use the Indonesian word lantai. And then you have resistance, which is the price ceiling. They call that langit-langit. But the idea is super simple. The price falls and hopefully bounces off the floor, or it rises and gets stopped by the ceiling. And of course, you're going to hear a ton of acronyms, like SR. That just stands for Swing, Retrace, Extension. It's another one of those specific chart patterns they've trained their eyes to spot instantly. This whole specialized vocabulary, it's totally key. It lets them communicate really complex ideas with incredible speed and precision. So how does all this vocabulary actually turn into a strategy? Well, this isn't just theory, right? They use very specific, repeatable tactics. And one of the most common ones you'll see is what they call the black candle trade, or sometimes the two-candle rejection trade. But before we get into the nuts and bolts of that strategy, you have to understand their core philosophy. And this quote just captures it perfectly. It is all about reacting to the data you see on the screen, the price action, the candles. It's not about trading on a gut feeling or some kind of hunch. You trade what you see, period. Okay, so here's how it works. And the key word here is discipline. First, you see the market try to push up and fail. That's your first rejection. Then you wait and you see it happen again. That's the second rejection. Only then do you place an order to sell. And the goal here isn't to hit a home run. It's to grab a small, quick win. We're often talking just 4 ticks of profit, which is like the smallest possible price move. All right, so now you've got the language down and you understand a key strategy. So let's put it all together. We're going to walk through a really dramatic, real-world trade that actually happened on the morning of August 19th. This, right here, is where all that theory becomes cold, hard reality. So let's set the scene. It's just after 9:50 in the morning. The NASDAQ is, well, it's going nuts. It started out calm, but now things are getting super chaotic. Prices are just swinging wildly. For anyone who isn't prepared, this is a really dangerous moment. But for these traders, this is an opportunity. And then it happens. Just all of a sudden. One of the traders said it was like the blink of an eye. The price on the NASDAQ just completely plummets. We're talking a staggering 100-point drop. I mean, this is a massive, high-speed move that can absolutely wipe people out. But see, they were ready for it. They saw the price collapsing right towards one of their key areas that they had mapped out way in advance, that S2 support floor, sitting at a price of 640. And as the price literally crashed into that exact number, their pre-planned buy order went off. The price bounced off that S2 floor, just like they thought it would, and boom, they were out moments later with a profit. And remember that confusing quote from the very beginning? S2 touched 640, you are done and laughing now? That wasn't jargon, that was a victory cry. But What makes a strategy like this actually work isn't just the charts and the secret language. There is a huge human element at play here. It's really all about psychology, community, and a ton of discipline. You hear the traders talking about discipline all the time, about taking your profit and just walking away, not getting greedy. They talk a lot about managing the fear and avoiding that classic FOMO, the fear of missing out on a big trade. And the most crucial part, they are not doing this alone. This trading floor has multiple mentors or floor leaders, all streaming at the same time, giving guidance and making sure everyone sticks to the rules. In fact, one of the floor leaders put it perfectly. He said, trading is not a lone business. And that just hits the nail on the head. In a world this high pressure, trying to go it alone is pretty much a recipe for disaster. So that community, that mentorship, it's not just a nice to have. It's absolutely essential for making this whole thing work. And all of this really leaves us with a fascinating question, doesn't it? I mean, we've seen the hard data, we've looked at the charts and the strategies, but we've also seen this tight-knit community that relies so heavily on mentorship and psychological discipline. So it really makes you wonder, in today's crazy digital markets, how much of being successful is about the system you're trading, and how much of it is about the people you're trading?